the median unit price has increased by 20% to 540,000, and the median house price has increased by 16.4% to 786,000. The gap between houses and units is closing, and it couldn't stay that wide for too much longer. The median house price annual growth actually peaked at 25% in December 2024. I actually saw the peak of activity hit in around September. What's happened to sales volume? You might be thinking, with the number of listings still being so tight and hovering at 4,500 for the past 12 months, there hasn't been that much turnover of properties, or sales volume as we call it. But you'd be wrong. The median weekly house rent increased by 4.6% over this last financial year, compared with 12.1% across 23-24 and 16% the year before. That rate of growth in rental prices definitely slowing. And the median weekly unit rent increased by 10%, 14.3%, and 19.3% over the same time frames.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day and welcome to another episode of Perth Property Insider. Today I'm bringing you one of my favourites that I do every 6 to 12 months. And today I'm looking at Perth's best and worst price performers and rental yields over the last year. I always find these episodes really interesting just for my own research, because we can see what segments of the market is moving strongest for both houses and units, and also what sort of rental yields are on offer for each as an investor, weighing up where we might look to buy and what's sort of happening to our existing properties. So let me take you through some of the research that has just come out, the data, and I'll unpack it to give you my insights. So over the last year, the big headline is that units have outperformed houses in Perth for median price growth across 2024-2025 financial year. So the median unit price has increased by 20% to 540,000, and the median house price has increased by 16.4% to 786,000. So the gap between houses and units is closing, and it couldn't stay that wide for too much longer. So I've been telling you over the last 12 to 18 months that units have been very hot, very undervalued and worth getting into. And I've been expecting strong price growth, which is now showing up and being reflected in the change to the median prices at both the Perth level and at the individual suburb levels. The median house price annual growth actually peaked in December 2025 at 25% in the year to December 2024. So I actually saw the peak of activity hit in around September. We had a relatively quiet period for 4 to 5 months to start this year, with the two elections in the way. Finally got them out of the way. We had an interest rate reduction in February and one in May. And now we're back to more normal conditions. So I expect that we'll be going into our second phase of growth, where the median will keep increasing, not at the same rate that we have had, but 16% over the last year is still very, very good. And even if we head to something more like 10 to 12%, that's going to be still, I think, a welcome upside for investors ahead, especially if you've been holding a while. So what has pushed this move to units? Well, people are getting priced out of houses. The affordability and the gap between houses and units continue to expand. The yield, with rental prices continuing to increase, has just become more and more attractive as well for investors, chasing that better yield and not having as much holding cost as a house. So when you couple all that together, we've seen first home buyers getting in, we've seen downsizers selling up their homes in the suburbs and trying to stay close by to where they live, and losing those backyards and all the extra maintenance that they need to do. So I've certainly been selling for a lot of those type of owners, and also selling to a lot of those type of buyers. So you've also got those continuing pressures for overall living costs and making buyers a lot more price sensitive. So that initially fueled the growth in the bottom end for houses. And we saw that across 23, 24 financial year. About 12 months ago, I predicted that it was going to move up to the middle and into the next price brackets. So today I'm going to bring out the data and see if I'm right. And to give you a big spoiler, I am right. But it's not hard to be right when I'm seeing it every day, week, and month in the market right in front of me. So it's not such a great grand prediction. And it was obvious that once people had the growth in the bottom end, they were going to have the equity to fulfill their dreams and move into those better suburbs. And that's what we're still seeing at the moment. So when we talk about units, we're lumping what you might think of as a unit or an apartment being lumped together with villas and townhouses as well. So they don't have as high a land component, but there's certainly better options. There's certainly lower density options among that big, lump of things that are put together. So buyers have been chasing as much sort of land as they can get and still coming to grips with the higher density as being an option. But I'm definitely finding it much easier to sell apartments and units at the moment, with people finally coming to the realization that they can get a lot more value for their money when buying that type of property. So when we look deeper, we can see that there's not just one market when we talk about the Perth median for units and houses, but there's hundreds of suburbs that have exceeded the growth in the overall median, and there's many that have also underperformed. So it really highlights the importance of suburb selection, and you can't just throw darts at a board anymore and have every suburb increase. You're going to have to be a lot more selective over the next 1 to 2 years as we go about the tail end of our growth cycle. So, what's happened to sales volume? You might be thinking, with the number of listings still being so tight and pretty much hovering at around 4,500 for most of the past 12 months, that there hasn't actually been that much turnover of properties, or sales volume as we call it. But you'd be wrong. So, despite there being so few properties on the market, we've actually had 5.1% higher level of turnover in the number of properties getting sold compared to the previous financial year, which shows that there's more properties that came to the market and sold this financial year, and there is more turnover than people think that there is. It's just that properties are selling quick, clearing off quickly, and you get that perception that not very much is available. There might not be that much available at any one time, because historically a neutral point in our market is probably around 12,000 properties. We were up at around 16,000 properties, so we had around 4 times the number to choose from at one point. But very few, there was a lot less of sales volume of properties actually getting sold when we had that many for sale. So still many opportunities for buyers to get into the market, and you do need to make decisions quickly, have all your finance ready, and be ready to act when you find the right property for you. Now, let's dive into the top 10 suburbs for growth and see what sort of observations and trends we can see. So when we look at the top 10 suburbs for houses, we've had Bateman, which has got an annual median house price of 1.3 million, go up by 36.8%. That was the number one highest growing suburb over the last year. Congratulations to Bateman and the Bateman residents there that have all experienced some great growth. The median selling days at the moment is still 12 days, which is very tight. So arguably there should be some more growth ahead on that. And if we look deeper at all the underlying trends and analyze that, we could tell whether or not, but that's all sort of looking good from a high level days on market. And then we go down the list, we've got West Leederville with 1.89 million median, and it's grown by 34%, days on market still at 9 days. We've got Ardross at 1.74 million, 33%. So all the suburbs in the top 10 have ranged from 28% to 36%. So very decent growth rates over the last year. Rounding out the rest of the top 10, we've got Callista, which is just at 595,000. It's a suburb down in Aurelia, next to Aurelia, down in Kwinana Way. We've got Riverton with 1.18, Shelley with 1.65, Applecross with 2.78. Interesting that Shelley, Applecross, Riverton, Ardross, they're all got those great public schools that I came and mentioned to you in my top 10 public schools episode, one or two episodes back. So no coincidence there, I would say. We've got Madeley with a 932,000 median price at number 8. Darch at number 9 with 1 million. So they're fairly close together, northern suburbs. And we've got Ridgewood with 715,000. That's a north coastal. So we only, believe it or not, had 2 suburbs in the top 10 that were below the median house price. Last financial year, we had 7 out of the top 10 suburbs that were below the median house price. So that's very clear that the heat and the growth has moved into the middle price suburbs now, and it's really showing up in the fastest, highest growing suburbs over the last year. So, what else can we glean? What other observations can we take? Fastest growing suburbs, when we look through them for houses, range from 7 to 8 days. The majority of those were higher priced. We did have a few more in the lower priced end. So we've got Merriwa, which is north coastal, Stratton, which is out beyond Midland Way, and we had Bellevue, similar location there. So those were the only 4 sort of lower end suburbs that are selling very quickly still, and buyers are seeing a bit more value. Interesting that all the suburbs that were in sort of Armidale Way, that were in Rockingham Way, that featured in those fastest selling suburbs and highest growth suburbs have all sort of slowed in their growth and no longer in the top 10. And I don't believe any suburb that was in the top 10 previously is still in there. I'd have to check Callista to see if that was in there, but that might be the only one. What other observations can we see? When we look at what sort of trend has been happening for the fastest selling suburbs, it's still middle price brackets. So I expect continued pressure to be on prices increasing over the next year for the middle suburbs, and that's evident from how quickly they're still selling. Now, when we look at units, when we take a look at number 1, it was Bicton, which was at 770,000. Annual price change in units, 55.6%. 7 days median selling days. Hamilton Hill at 535,000, 42% increase. Aurelia down that Kwinana Way as well, 320,000, 39% increase. Doubleview, 632, 37.4. Then we've got Shenton Park with 800,000. When we go through this top 10 list, the price growth has ranged from a whopping 55% to 32%. So definitely surpassing what has happened for houses. And you'd be pretty happy if you bought into any of those suburbs with a unit. Rounding out the list, we had Osborne Park, Bentley, Applecross, Bassendean, and Cannington. And when we look at where is selling fastest still, we've got Yokine at number 1. They're all sort of ranging from 6 to 9 days. We've got some really popular sort of suburbs in there. So Yokine, Bassendean, Inglewood, Noranda, Chewett Hill, Mount Hawthorn, Mount Lawley, Como. So really people focusing on buying into the lifestyle where there's a bit more of a cafe strip location, but it's not the none of the inner city suburbs are mentioned there. There's no Perth, no East Perth, no West Perth, no Highgate, no Northbridge. That's traditionally where you'd see the higher density. So people are, from what I've seen, focusing on getting into those villas, townhouses, and as low a density as they can afford.
Just real quick before we continue on with the episode, are you getting my email updates yet? If you're not, you're missing out on our suburb intelligence reports, which we tailor and prepare for your individual suburbs of interest, showing advanced stats and insights. You must get onto those. And I also send out exclusive invitations to our events, including webinars, sundowners, and workshops. So if you're not getting those, head on over to investorsedge.com.au/join and make sure you're receiving my email updates.
Now, some of the observations for units were that the unit market did record a similar trend of having majority of the suburbs being above the median unit price of 540,000. So only 4 out of the top 10 were below that 540,000 points. So even though people are chasing that affordability, there's still the majority and the greatest demand has still been above the median price for units. So interesting that it's not just purely about affordability. You can tell that there's still desire for a lifestyle in there. And historically, the medium time on market for units has been greater for houses, but with the growing demand for units, we've seen the median unit time match the median time for houses to sell. So they're both around 2 weeks at the moment across the board when we compare both houses and units. So units is definitely giving houses a run for its money, and they're selling fast. They've surpassed them for growth. And I think there's still more upside in both the unit market, and the hottest segment of the market will still be the middle. And you'd have to think that it's going to start moving to the upper priced suburbs as well. All these people in the middle that are getting these record prices, where are they going? They're either downsizing into a unit or they're upsizing, upgrading into a higher price above these. So that's why I think there'll be more pressure on the units with the downsizers. We'll start seeing more higher priced suburbs that are above 1.2 mil that are going to have these upgraders going into them. Hopefully that all makes sense. Now, let's take a look at the top 10 suburbs for rental yield and what we can glean from these. So, rent prices reached new highs in 2024-2025, with the median weekly house and unit rents sitting at 680 and 660 respectively at the end of the financial year. Although prices have increased, a significant change this financial year has been that rate of growth in the rental prices too. So we've seen the increases in houses and units slow, the increases in houses slow a bit. We're seeing that increase in rental prices also slow a bit. So, for example, the median weekly house rent increased by 4.6% over this last financial year, compared with 12.1% across 23-24 and 16% the year before. So that rate of growth in rental prices definitely slowing. And the median weekly unit rent increased by 10%, 14.3%, and 19.3% over the same time frames. So still very healthy growth in the median unit rent, 10% over the last year, but still a slowing trend when we compare with previous years. Now, this upward pressure on prices has been easing as a result of an increase in supply from investors buying into Perth, predominantly from the East Coast. We're seeing some locals still joining the party and taking advantage of the equity that they've gained in their existing properties to grow their portfolio. We do need to be a lot more selective if entering the market in this stage. And so that's added to the supply of rental properties. And we've also seen a slight softening in the demand. However, our population is still growing strongly, and there's still constraints in the building industry. So rental supply remains about 5% below its peak recorded in February 2021. So more increases are going to be likely. So expect that there will be further increases in rental price, but at a slower rate, more in line with this 5% that we've seen in the last year, is what I'd expect. Depends how that population growth increases and changes. I've got an interesting episode coming up where we're going to look at some most recent stats, which actually show that things are very, very strong as far as population growth. And I've managed to get some monthly stats when usually we have a 6-month lag on that. So it's going to be an interesting episode when I get to it. So the strong growth in property prices and the lower growth in rent prices has seen the yields decline slightly over 2024, although they've remained very strong. So when we look at the top 10 suburbs for rental yield of houses. We've got Cannington sitting at the top now with a median weekly house rent of $700 per week on a 613,000 median sale price, 5.9% rental yield. Impressive. Part of that's been because Cannington hasn't really grown and it's been a bit of the forgotten child. So arguably, if that attracts some more demand from investors, it could help to push prices up over the coming year. When we look at the top rental yields, they're going anywhere from 5.9% at Cannington. We've next got 5.4% Bentley, 5.3% Belga, 5.3% for Armidale, Maddington, and Brabham. And then we've got 5.2% for Pinjarra, Midland, Brookdale, and Langford. So top 10 ranging from 5.2 to 5.9% rental yield. When we look at units, we've got a whopping 8% rental yield in Bayswater. That's decent. And obviously depends how many properties within there are actually achieving that. But 8% for the top median unit yield. Then going to 7.5% Glendalough, 7.1% Wembley, 7% Kewdale, 7% Cannington, down to Spearwood, Beckenham, and Perth, all at 7% too. 6.9% and 6.8% for East Perth and Rivervale. And when you just look at how strong those rental yields are, and with the decreasing interest rates, now being able to get a 5.5%, if you buy into a complex that's got a relatively low strata fee and you have a bit of depreciation thrown in there, you'd have to be close to neutral, if not positive. So that's very attractive, certainly for investors. And if you're a tenant living in those suburbs, it's going to be cheaper to buy than it is to rent. So especially if you have a bit of a deposit in there and you're not paying loan interest on your whole amount. So you can just see how attractive this still is for units and why the pressure's going to keep on them increasing and the gap's going to keep closing to houses. I mean, you only have to look at the median unit and the median house price. There's only a $20 difference between the median house price and the median unit price. That just goes to show how underpriced the unit market still is and how attractive it is for rental yield. God, I'm talking up units a lot today, aren't I? So what are some of the other observations? In 2023, 2024, the top 10 suburbs for houses had yields between 5.7 and 6.1. And this year they range between 5.2 and 5.9. So not still attractive, not a huge decrease in the rental yields, but around 0.5%, no, about 0.4% or so. For units, in the top 10, they range from 6.8% to 8%. Across this financial year, they previously were between 7.4 and 8.1%. So still pretty unchanged for units between the financial years as far as rental yield goes. So out of the top 10 suburbs for houses and units, rental yields are definitely still strong, and you'd have to say between 5.5% is 5 to 8% is considered a very good return still, especially when we compare Perth around with the other capital cities. It surprises me how low the rental yields are in the other capitals and why it still is attractive for investors to come here. Now, when we look at how quickly were properties getting rented across 24-25 financial year, it's been hovering around 2 weeks median time to lease a property is what you can expect at the moment if you're a landlord. Obviously, this is definitely got to be looked at on a suburb-specific level, but we had Lake Coogee with the fastest leasing time for houses and Westminster with the fastest leasing time for units. So interesting that Westminster's still a very popular area to live, relatively close to Perth with good infrastructure and amenities close by. Now, before I go, I really wanted to touch on suburb selection and just take you through our thinking and methodology. So I've developed a methodology that I call our trifecta criteria. And it is used to ensure that the suburb, the area, and the property, that's all three being the trifecta, all stack up. And what we do is we use data analytics to look at what's predicted for growth over the next year so that we want to get each of our buyers for our buyers agency into something that's likely to grow strongly over the next year, to give them that equity, to give them that breathing room, that insulation on any further changes in the market, and be in the best position to release and recycle that equity back out. But a lot of buyers agents just chase that 1 year growth high and forget about looking at the underlying fundamentals. So that's why our trifecta criteria is so important, because we then look at all the underlying things. Are those fundamentals there to support growth over the medium to longer term? And we also make sure that the rental vacancy rate is tight and trending the right way, so that we're not going to have any issues finding quality tenants. So once we've got that suburb selected, we look into the area, what drivers are there or detractors exist within its location, what school catchments is the property in, is there any Homes West housing directly around the property? And we go and check those out to make sure if they're presented well or whether they're affecting the area around that property. What's the overall presentation of the street like? We ensure that it's not in a bushfire or a flood-prone area. So these are all the things that we're checking out at the area level, and we look at a lot more things too, but that's the main majority of them. So we've chosen our suburb based on short-term prediction, medium and long-term fundamentals. We've looked at the area and made sure that's stacked up, which is the second part of our trifecta criteria. And then we look at the specific property. So I look at how it's performed in the past. We calculate the average annual growth rate of how it's compared to the suburb. And we want the property to have performed better than the suburb, or not there to be a significant underperformance for any reason. We also look at how is the layout of this property, how is the landscaping, do any areas need renovation or maintenance, and how desirable the property is so that we can attract tenants and it's got a good resale potential in the future. Now, it's okay if it does need a bit of renovation and maintenance, but we want to go in with our eyes wide open and expect these costs so that they can be factored in. And there's some good opportunities when we do buy a bit of an ugly duckling that can be done with polished up. We've got a lot of trades, and we've got a renovation project manager that can be used for those things too. And then we look at the specific location and the neighbours and what factors will appeal or detract from the rentability and that future resale. And we appraise the property's likely market value and the rental value. And then if we're seriously looking to buy it, we'd chat with all the local agents having similar properties under offer to find out the most current and realistic market value, not just based on what has sold. And at the moment, when I'm doing appraisals for people, we can't really look at the last 6 weeks of data as most current and accurate, because the period before that we were in our elections and the market was a bit down and a bit quiet, and some properties didn't sell for as much as they should have. And so that's why you really have to be looking at current data, speaking to agents and finding out what's under offer in order to price the property that you're looking to make an offer on. So how can we help you? If you haven't already got a clear plan, it's really impossible to know whether a property is a good investment for you or whether it's not. So the same property can be good for someone, bad for someone else. It really comes down to your plan and how it fits into your overall strategy. So we combine our experience with the latest software to give you clarity on your goals and the best way to achieve them. And this is really about making your investing work hard for you to improve and upgrade your lifestyle and your home and have those choices throughout our life, especially when we get into retirement later. So if that's of interest, go to our website, got a link in the show notes, go to our investing page and request a chat with us. Have you thought about using our buyer's agency? So we've got an amazing service where we're selecting high-performing properties. I just talked you through our criteria so you understand it. Check out our website, get in touch for a chat. We can see whether we're the right fit or not. And if you've had an offer recently accepted, make sure you get in touch with us on the property management side. We're amazing at property management, one of the most highly awarded managers in Australia, and we've got over 1,000 reviews on Google. So we're usually the go-to when it comes to that. And we love hearing from our podcast listeners with regard to all the ways we can help. So reach out and we'll see if we're the right fit. Thanks for tuning in. Do like and share us and let me know any ideas for upcoming episodes that you've got. And I always appreciate getting feedback, and I'm always looking to improve and bring you the best guests, the best insights, and really help you on your journey to improve your life and grow your wealth. So thanks for tuning in. Catch you on the next one.
Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.